What's up, everybody? Hope you're all doing great, and welcome to this new live stream on the interest rate and the Federal Reserve press conference. That's mainly going to be it, right? So welcome back, everybody. We're just waiting for it to begin right now. It starts in 8 minutes. So we'll take it easy a little bit. How's everybody doing? Is everybody doing good? Are we still making some money in these markets, or is it drying up? Markets the last couple of last 2-3 days have been very quiet. Like with Bitcoin, everyone, like almost everything was just following Bitcoin, and Bitcoin has mostly just been in this range between 26,100 and 25,700. So hopefully we'll see a difference today. We got a little bit of a bearish reaction after the interest rate itself, which, by the way, went from 5.25 to 5.25, so it stayed the same. And right now we'll just have to wait. We'll just have to wait until the press conference. And there they'll talk a little bit more about the about what they expect from monetary policy, and from that's also why I'm live streaming. From there I'll try to kind of give you my thoughts on what everything means, right? So they'll say a lot of economic things and stuff, and I'll tell you whether that's bullish or bearish for Bitcoin. Overall, I'm actually pretty interested to see what the dollar strength index is doing. It's always pretty interesting. But for now, we're just waiting. Oh, that's not how you find it. That is how you find it. Well, yeah, dollar strength index is actually quite bullish right now. I think there was some news. I saw that somewhere on some sort of Instagram account that they said that they'll raise the interest rates 2 more times in 2023, which is quite bearish. But if this is the only reaction we're getting, it's actually quite mitigated, right? It's actually not that much of a bearish reaction. So for now, we'll just have to wait. Bitcoin is not done yet. Not in the toilet, at least. Lina update. Yeah, Lina right now we're getting some bullish momentum because of I don't know what, but overall the direction is short, right? We're probably going to find resistance right here at around 1.65 cents. And apart from that, not a lot of movement. Ethereum is also quite bearish right now. Bitcoin is quite bearish. Litecoin is. It's all doing the same. Right, I mean, all of the cryptos have just been consolidating and are now getting some bearish momentum. Sui is getting bearish momentum. Injective, Solana, Conflux, Cardano, Matic, everything is just kind of moving alike. Dollar strength index has been quite bullish, but that hasn't really broken above anything yet either. So yeah, that's the current state of the market. A short on Bitcoin advisable. I mean, yeah, it's I don't know. I mean it's betting, right? It's just betting on that the result is going to be Excuse me, my mouse is gone. Let's see if I can get it back. Yeah. So it's just betting that they'll say something that they're going to increase the rates even more, or something like that. Just being hawkish on the entire monetary policy, which with the news we just got, we already have heard that the interest rate will probably go up even more. And if this is the reaction up until now, I'm not sure if shorting is the best idea. I mean, I'm definitely not against it. Right now, I would argue a short is even better than a long order, but that doesn't mean that it's still going to be risky. It's still going to be very risky in these market circumstances. Oh, I was actually looking at the wrong chart. So 4 more minutes or so. This is the live stream. We'll keep that on a little bit while I'm also looking at the comments. Yeah, Haaland or Kimmich? It's a difficult one. I think I look more. I mean, right now my hairstyle is a little bit more like Kimi, but maybe in my face a little bit more like Haaland. But I'm not as successful as him yet, so we'll have to see how that goes in the upcoming few years. And it's not offensive. Matthijs de Ligt. That's how a lot of people. That's what a lot of people recognize me as. Very well said, Matthijs de Boer. All right. Yeah, 3 more minutes. Bitcoin is stabilizing a little bit. We'll actually zoom into the 15-minute time frame. There we'll get a little bit more volatility. So this is the current state of the market, right? I mean, if you kind of zoom out to the 4-hour time frame, this is the range which we were in between 26,250, which we spiked up to when the inflation rate was actually lower than expected. And right now we're getting some bearish momentum because of the inflation rate. I'm actually going to try to listen to the things myself as well. It's almost starting. All right, let me know. Can you now hear anything in the in the desktop audio? I'm going to turn it on. Can you hear this? Can you hear this audio? It's like it's a blinking sort of sound. I'm not sure. It's a little bit annoying. Yeah, where does he get the time from, huh? Haaland. I need long hair. Oh, maybe. Yeah, you hear this? It's an annoying sound right now. But yeah, okay, we'll see if it's loud enough. I mean, I live stream these interest rates. I live stream these press conferences more often. And usually you cannot hear it, but I'll actually turn on the captions. Like this. Alright, let's see. Options. Usually I do something like this. I do it yellow. Yeah, font size a little bit bigger. Something like this. Yeah, so we'll keep it like this. If you can hear it, that's great. If you cannot hear it, then I'll just have the captions on the video. So it's not that big of a problem. What's up, everybody? Thomas, good to see you here. Yeah, I'm going to save this live. Hella confused. It'll just be in my videos, but you'll be able to see it there. Alright, not starting yet. Marvin, good to see you here as well. Yeah, you can hear it clearly. We'll see. I mean, it's probably going to be a different story when he actually starts speaking. But maybe you also don't want to hear him. Maybe not. Bitcoin still stable at around 25,860. In the middle of the press conference, I'll be alternating probably between commenting on this and all right, here we go. Here we go, guys. There he is, the main man. Good evening, Jerome. I'll actually make this a bit smaller, like this. It's better. And then this.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve.
Nothing new.
Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
Ooh,
in light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time.
Bearish.
And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate.
Come on, America. You can do better than that.
The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs-to-workers gap has declined, labor demand still substantially exceeds the supply of available workers.
Bitcoin.
FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
A long way to go?
The median projection in the SEP
Bearish.
for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025.
Wow.
Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
I will give my full opinion.
The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year.
Let me know if you can still hear me.
4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored.
We've heard this
Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they've felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions,
to this could be bullish.
Most recently were easing.
The answer to this could be bullish. Because she's phrasing it in a way in which
I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly. By historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about...
Well, that's very in line with what he said the last time around. The last meeting there was, the general consensus or the general thing that was that came forward out of the meeting is that they're going about it meeting per meeting, right? So we have these meetings every every month and a half or something. So that's just in line. And right now, if we're kind of reflecting back on the whole speech, I would actually consider the last thing he said. Excuse me, my chair is on top of my headset, which is very annoying. Almost, well, okay, it doesn't matter. But, all right, so overall, I would consider the last thing he said to be actually bullish. The thing is that the interest rate has just gone up, has just stayed the same. The outcome of that was expected. The main thing which has kind of changed, and which is also a little bit bearish, is that the projections of the interest rates, so that has to do with what all the board members think of the interest rate, right? What do they think? Does it need to be increased even more? Can it stay the same? Can we see some decreases next year? And right now, they're expecting the interest rate this year to be 5.6, whereas first of all, that was 5.1. So they do think they'll need to increase it a bit more this year. And the big question is, and that's the difficult part, was the market already expecting that? Because to be fair, in the last meeting, the general consensus in the market was that we needed more rate hikes. And for some reason, because they were pausing the hikes this time around, I actually became a little bit more dovish. So to me, this seems a bit bearish, because they are going to increase that interest rate even more. But now what he said at the end, with that they'll take a look at it meeting by meeting, that just kind of makes it all neutral again. And neutrality can actually be bullish, all right? That's going to be an interesting thing, because in the end, right now, the overall outcome of this meeting is very, very neutral. I would say. I mean, the dollar strength index kind of says the same. We got a spike up. With the interest rate actually coming out, because there we heard that they're going to increase it even more. But right now he's kind of dismantling that by saying, right now we expect that we need to increase it even more. But if the economic events and if the economic numbers in the coming month and a half, coming 2 months say something differently, we will not hesitate with pausing it and maybe adjusting our estimates and our projections. So that's actually the bearish thing in this. So what I do, I'm doing nothing. I mean, I'm not getting into the markets with this. I am in some trades, but I'm just leaving those trades open. I mean, right now we are actually quite strong, like I expected. But let's actually dive a little bit more into the press conference, and then I'm not sure how much more,
which we have seen. We have actually seen. I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue.
Op zoek naar een nieuw SIM-only abonnement? Wow. Simyo heeft nu tijdelijk hoge kortingen op SIM-only abonnementen. Je krijgt
indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick.
I'm never going to buy YouTube Plus. Out of principle.
Nick Timmeros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't
I'm Dutch,
wait
man. I'm
just
cheap.
by buying a gym membership. I have
Can't
to
change
go
it.
to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first, I would say that the question of speed is a separate question from the question from that of level. Okay, so And I think if you look at the SEP, that is our estimate, our individual, it's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting, it's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward. And we'll get to see, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right. And this is, if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting.
Good question.
It'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you can from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Gina. Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, and marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6%?
You could have made a lot of money on paper trading it. It's been very predictable.
I mean, on the first part, I just think we're following the data and also the outlook. The economy is the labor market.
I'm going to cut it off. I've heard enough. I think you all heard enough. I don't think we're going to get that much more information. If you do want to check it out, I'll post the link in the description right now of the stream. There you go. If you want to follow the press conference, then there you go. But I think everything that had to be said has already been said. So to kind of do a summary and then to end this stream, because I think we've heard everything. I did a quick summary. My expectation for now is actually bullish, and the main reason for that is because the general direction was down because there was an expectation that the interest rates were going to go up even more, right? So at around 8 o'clock, that is when the prices started dropping down. What we got was the interest rate going from 5.25 to 5.25. But we also saw the interest rate projections for right now, for the end of this year, for the end of the first year and the end of the second year. We saw them going up. So that was bearish because that meant more increases. But right now what he basically said, and this is the best summary I can give, but right now what he basically said is that, well, all right, that may be true, and that's noted by all of the board members. All of the board members together came to that. That doesn't mean it will happen. We're still going to check out all of the news, which is also what he said last meeting, and then based on that, we're going to form an opinion, and we're going to form a statement on the next interest rate decision. So that kind of, whereas first you had some kind of bearish pressure, that's now being relieved, and that's why I think we can actually get some bullish momentum. And apart from that, I also just think it's in the technicals. But overall, I mean, the market, first of all, and I do want to say this, because over the last period of time, I have seen a lot of people lose money because of manipulation and stuff. I think the thing is that, and thank you, Sarah. I think so too. No, but the thing is that what we've seen over the last couple of days and the last weeks, and I want to tell you this, is that there's been a lot of manipulation. All right. So what we saw with the inflation rate, for example, inflation rate was lower than expected. That's 100% bullish. But what we saw is that we got quite a lot of bullish momentum and then a crash. But for whatever reason, all right, it doesn't matter what caused it. What matters is that the markets right now are pretty unstable and quite manipulated, I think. Volume is low, so then manipulation also goes up. So just be careful. Honestly, I would not trade anything until tomorrow morning. I'm currently still in some trades, but I would still stay out. I mean, overall, my analysis of Bitcoin and therefore the markets, because everything is right now tied to Bitcoin, would be that we're in this level between 26,250 and 25,650. We're going to break out of that this week. If we'll get a bullish breakout, we can actually expect levels like 26,700. If we'll get a bearish breakout, then we'll probably drop down towards levels like 25,000. That is the most general analysis you will hear, but it is the truth. All right. So yeah, be careful. That was the stream for now. I think we covered everything you need to know. Let's see. Appreciate it, Patrick. Yeah, that's true, Thomas. That could also be. Yeah, that could also be bullish for the rest of the year. If this does change, it does change their stance, right? So it's so it kind of goes from, so they've been very hawkish for a year, and right now we do see some sort of a transition from being very hawkish to being a little bit more dovish, or less hawkish at least, because they are still hawkish. So yeah, we'll see, but that's a good point. And that's also probably why the dollar strength index is actually retracing like this. That's one of the reasons, probably. Appreciate it, everybody. Appreciate you all being here. Trading strategies like SMC and price action work on crypto. Short answer, yes. There are people making money with strategies like that. The thing is that you'll have to find your own way, right? You'll have to find your own criteria in which they will work. And you have to see on which cryptos they work at what points of time. The crypto market is very, very unstable. So the general direction and the situation in the market changes all the time, and you need you need to be mindful of everything that's happening. But the short answer is yes, they do work. But all right, that's the stream for now. Everybody, thank you for being here. I want to wish you all a great night. If you're from Asia, good evening. If you're from Europe or the Middle East, probably still. And good almost afternoon in the US. But for now, thank you for being here, and I'll see you all tomorrow in my new videos, hopefully. Bye.